Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking about Core PCE and the PCE Price Index. Really a big deal, something that came across the boards earlier today. One of those things that we need to understand what it is, and we need to be able to trade it, because if we can't trade it, we're going to run into trouble, and if we run into trouble, it's going to hurt our profitability over probably the next 6 weeks. Now, today was an interesting number. I mean, what we saw was sort of a situation where maybe inflation's coming down a little bit. And that's definitely a welcome sign for the Fed, the United States Federal Reserve, that's just decided they're going to cut interest rates. But what else can we really say about today's, engagement? Inflation's still very, very high. It's entrenched. It's not necessarily coming down, but it is sort of holding firm. So we're going to go over some charts. We're going to look at some fundies and really try to dig in to what PCE said. We've got a bunch of trade updates. We've got a U.S. dollar, Canadian dollar that I'm watching very closely. Our entry point there, I think, is going to come into play relatively soon. And then also the Kiwi CAD is already gone. We've got that in play, and it's looking pretty good. We're about 18 pips off of our profit target, but thus far we're about 20 pips in the money, so that's pretty good there. And then the U.S. 100, we put a trade ID out earlier today. That U.S. 100 up around 25,000. I'm going to go over that as well. Lastly, what I would say is that Swissy, remember that trend line in the U.S. dollar Swiss franc, that looks like it may come into play potentially early next week. We probably could have shorted it yesterday, but it's always best to wait and be sure. Be sure exactly of what you're doing before you do it. So good to see everybody back in the room. Yes, sir. Hey. Yes, sir. I know we're usually on a no donation Friday, but I'm definitely in the money and taking it today. Yeah, today was a pretty good day to trade. I mean, we're seeing the markets really moving. We're seeing the U.S. indices on the run, north, and basically it's all about dovish policy. That PCE figure suggested that maybe the Fed can cut interest rates. I won't say with impunity, but definitely could be aggressive with the rate cuts moving forward. So it's an interesting type of a dynamic here. Andy Tong, hi Shane. I was looking at the heat map on switch markets. I know you said that you were looking at that soon. Can you please show how to use it at some point? Andy, just probably wait a few days. We're going to have what we call the currency strength meter is going to be out, and essentially it's very similar to a heat map. It's not quite a market heat map, but it's just a Forex heat map, and we're going to have that YouTube video out, probably going to drop maybe Tuesday. So if you just hold your water, I show you how to do everything there. Download it, add it to MT5, get it up and running, the whole 9 yards. So good question, Andy. The heat map is one of those tools that a lot of folks really like. Some don't, but some really use it every single day. Gordon Williams, good to see you. Tuku, Andrea Gorwal. All right, everybody. Good to see everybody. Let's go ahead and we're having some technical difficulties here yet again. It's sort of a widespread thing. It looks like our connection's good. It wasn't yesterday for some reason on that Forex and Futures webinar. I want to thank everybody that joined me for that. I know it's not necessarily everybody's cup of tea, but today we're having some hardware issues, so I'm going to do my best to put on a nice live stream here. If you have any questions at all or any markets you'd like to look at, go ahead and let me know. Tina, good to see you. Dina, welcome. All right, U.S. dollar, Canadian dollar. This is one of those that I've been looking at for quite some time. And this 38% retracement of the monthly, right up there, right around 140.17, maybe 140.09 was our entry. This area is one that I've definitely got marked down for next week. We're right around 139.37 right now. So we're going to have an opportunity potentially to sell that, I believe, probably in the next several sessions. Seeing a really nice upward trajectory, a nice bullish move here in the dollar CAD. Now, even though the dollar's getting hit today, the Canadian dollar isn't really putting on much of a show with regards to a big-time pullback. It's just, if you look at the dollar CAD today, we're off about 0.02%. That means we're flat. And if we're flat, that tells us what? It tells us that the Canadian dollar is particularly weak. Why would I say that? Because WTI crude oil is up above 65. Now, you remember we scalped 65 to the short earlier this week. We're back up above 65 now, and we're up about 0.75%. Yet the Canadian dollar has really done nothing against the dollar today. That tells us that the Canadian dollar is weak. That's what it tells us. So remember, we've got crude oil sort of at a high seasonal price. I believe it's high with relative to where we've been. That should be a good thing for the Canadian dollar, and it just really isn't working too much. So I think that the U.S. dollar is going to push higher against the CAD, and we're going to have a chance to sell probably right up there around 140.09. So I'm really looking forward to that. I think it's a fantastic opportunity potentially to make a little bit of money there. So there's our trade update, USD, CAD, resistance in view. We've had that drawn up for a few days now, but you can see the market's coming our way. We've broken above that 13-month EMA. We're going to have a chance to trade here relatively soon. Let me see, Bobby Bob. Good to see you, Bobby. Let's see, Blue Mango. Shane, I hope you're well. Will today's news release have any long-term effects on the market, seeing that everything came in as expected? I think it will. I think it will. I mean, we're going to look at some interest rate expectations here in a moment, but I think what it did was it said, okay, it gave the Fed the green light to keep cutting. Because if you get a really hot PCE number today, the Fed's going to have a problem saying, oh, can we cut? Should we cut? Do we want to cut? Don't we want to cut? That's going to be a very difficult thing for them to do. So what I would say is that, yeah, it was a big deal because we expected it, especially me. I'm guilty as charged. I was expecting it to come out relatively hot. I thought that we were going to get a big reading out of PCE, and it was really going to foul things up for the Fed. Now, I mean, the path forward looks fairly straightforward. I mean, they're going to cut. They're going to cut again next month, and they're going to cut one more time this year. And I think Jay Powell will not surprise me if he announces his retirement at any time. But he may hold on for the last 2 of this year and then hang him up early next year. I don't know. I have him out by New Year's, though. I've been saying that all year long. I'm sticking to it. I'm not going to ditch it, not going to ditch just yet, but I think that the Fed is cleared to cut interest rates more. That's for sure. Let me see. Tina, the figures haven't got much of a changes. Yeah, they haven't. And we're going to go over that in just a second because it was a big deal this morning, even though they came in line with expectations. All right, Fibonacci support in view for the Kiwi CAD. And what we have here is a trade that we've been watching for a long time, 62% of that monthly range. You'll notice I'm working with monthly numbers. That's not really a coincidence. We've got monthly numbers because we're coming towards the end of the month. A lot of these long-term levels will come into play. You just got to be patient. So we're looking at a lot of monthly charts. It's true, but it doesn't mean that we can't have great trades on them. Right there, 80.19. Our entry point was about 80.26. And if you go back and check that trade ID out, it's been up for a few days. This is interesting to me. 30-minute chart. You can see this one went earlier today. Right in here. Let's go ahead and put our entry point down. It was at 26. Right in there, I believe. 26, we hit it almost perfectly. Right there, 20, let's see, about 6 p.m. last night, so right around that 6 p.m. my time, right around that Nikkei, not the Nikkei Open, but the Tokyo Open, the Tokyo Open, and you saw we came down, we tested perfectly, we tested 80.25, that quarter handle, and now we bounced up, and now we're rolling up to the top side. We had a pretty good peak here. Our profit target, our next level is going to be 62, so our high was right around 49, 80.49. So what we have is a market that's rotating in between 80.25 and 80.50. All right, key numbers yet again, the quarter handles yet again. So what do we have? We got rotation. Do I like our opportunity to hit our 62 target? I like it. I think we've got a pretty good chance to do just that. We just got to wait and see how it pans out, but you can't really argue with the entry. We took 0 draw. The big question would be, Shane, do you want to take profits right now? I'd say, well, I mean, you could. You don't have to not take profits. You could do it if you wanted. To me, I would just go ahead and wait it out. Could you move to break even here? Yeah, you can move to break even. If you do those things, be consistent. Do it every time or don't do it at all. That's what I mean. You can't move it to break even sometimes and then let other ones roll against you, or else you're going to get chopped up. You're going to get chopped to death. And I don't want to see that out of anybody. I think that it's a good thing that we understand to be consistent in our trading. If you're not consistent, I almost guarantee you're going to lose. You've got to be consistent. Stick to your guns. I mean, it's okay. We make decisions in the market, and we do it for a lot of different reasons. One of the biggest ones is to be consistent. That's all strategy is, guys. It gets you in and out of the market with consistency the same way every time. Now, are the results going to be the same every time? Of course not. But as long as you're behaving in a disciplined, structured fashion, at least if you're not winning, you know why you're not winning. You said, okay, well, my stop losses are too tight, or my trade management's a little bit flawed right here, or my entries aren't the best, or I'm rushing to get into trades. But it's when you do something different every single time. Now, I'm not saying you can't execute different kinds of trades. We talked about swing trading earlier this week. That was probably the most watched stream all week long, and a lot of folks like the idea of swing trading. That's great. That's fantastic. If you're going to be a swing trader, you can be a swing trader and an intraday trader. You can. One strategy does not eliminate the other strategy. But when you're swing trading, you don't take your intraday principles and throw it on swings. And when you take your swing trades, you don't throw your swing trades on your intraday trades. You've got to make sure that you know exactly what type of trade you're executing, stay structured, stay disciplined, and be consistent. If you can do those things, you're going to win. You really will. A lot of people don't believe that this can be done. They don't believe trading can be done. It absolutely can be done. You know, the real question that we have to ask ourselves is, do we have the discipline or do we have the desire to do what needs to be done? And what needs to be done? You don't trade when there's nothing to trade. You only trade when it's time to trade. You stick to your strategies. You adjust your strategy over time. That's how you do it. You be consistent. You go, well, I moved to break even on this one and I got stopped out, and then I let the other one run, and of course I lost that one. And then you start to believe that the world's against you and everything. The world doesn't care. The markets don't care if you lose $1 million or make $1 million. The Forex is a $4 trillion a day market. 4 trillion with a T. They don't care if you sneak a few 100,000 out. They don't care. It doesn't matter. The markets aren't against you. Make sure that you're not against you. Very important. All right. That was my speech. I got to get off my soapbox and stop preaching today. Inflation cools. This was a trade idea that we put out earlier today. 25,000's in play for the U.S. 100. I've been talking about this level for a long time, and the reason why is it's important. It's a big round number. It's a key level, and it's one that we've been watching for a long time. To think that the folks down there at JP Morgan or Citibank or Chase, or all these institutional traders and all these big hedge funds, maybe the quantum fund over in Europe, the idea that they haven't been looking at 25,000 in the NASDAQ is silly. It's the biggest big round number out there right now. I would equate the 25,000 valuation on the NASDAQ to the $50,000 level in the Dow Jones Industrial. There's no question this is going to be a big time level. We can make money off the compression. Now, all I'm looking for at these big levels is a little bit of wiggle. That's it. We just want to see a little bit of a debate at 25,000, a little bit of a pullback, maybe a little bit of a run, and then just sort of stop. And as long as the price does that, we're going to win. We have the ability to take a short right here and pull in a little bit of money on that retracement, and we can do that. We can do that all day long. So for your U.S. 100, I know most of the international clients are trading the U.S. 100 or the U.S. Tech. Here in the United States, you're going to be trading the NASDAQ, E-mini NASDAQ futures. Those are the things, the products that we're going to focus on here. For the U.S. 100, for U.S. Tech, for the E-mini NASDAQ, 25,000 is the number. Now, we're going to get to 25,000 faster on the futures contracts. That's for sure. But on these CFDs, you just got to understand where that level is, because what's important is that the broader index, the NDQ, the NASDAQ, is closing in. We're at 24. Right now, it's trading 24,480. That's big. So let's go ahead and have a look. 25,000, how are we going to execute? We're going to look to sell right in front of 25,000. I believe I have 24.925. Pretty good area, something like that. Looking for a lot of pips here. Position trade. Let's see. We got 29. I can't quite read it. I got to get some glasses going at some point. But we're looking at about 29 or 24.925. So that would be sort of the zone that we're looking to trade. That's going to be sort of the short. And then the idea there is to have your stop loss just above 25,000, and you're looking for price just to sort of wiggle right in here. I would be very surprised if we take out 25,000 just on a bum rush north. Very surprised. So as far as I'm concerned, that's going to be a nice trade to the bear, and one that we should definitely be looking at and thinking of as we roll deeper into Q3. I mean, we're almost in Q4 already, guys. The holiday season's right around the corner, and we're going to be talking about Christmas trees and probably just when not to trade. We've really got a fantastic October and a fantastic first 3 weeks of November. And then we come back and we have about 7 sessions in December that are legitimate. So when we start looking at the rest of this year, 2025, we've probably got about 40 sessions left that I would consider to be premium sessions, good sessions. And then we get into the holiday season down the stretch and it just really dries up and it's difficult to trade. I've got a few strategies that can help us trade it if you want to be in front of the screen. But right now we're in premium trading territory. We've got the Fed that's going to be active. We've got all sorts of news breaking all the time, seemingly. There was more political news in the United States today. I'm not going to cover it because I don't believe it's going to impact the markets much. But there's a lot going on right now, and that gives us volatility and an opportunity really to trade and knock a few trades out of the park. All right, here's another one that I wanted to cover, and then we'll open the floor up to any markets that you want. I'm going to go ahead and recap Core PCE. Anything you guys really want to talk about today, I'm more than happy to do that. There was an old radio show where the guy always had Open Line Friday. Well, this is Open Line Friday. Anything you want to ask me, go ahead and ask. This trend line right here, we talked a lot about it yesterday, and you can see we sort of drew that one right from this peak. It's not accurate. And one of the reasons why it's not accurate is because MT5, for all the things that it does well, it does struggle on dialing these trend lines and things in absolutely specific. So you can always enter coordinates and things. I always find that sort of cumbersome. I really want to focus. You can start here and you can bring that trend line in with down action. You can do that. For me, I don't necessarily need that peak to be the beginning of this trend line. I could look right here. I like this pullback right here. So that's 1, that's 2, that's 3. That's plenty for your trend line. You don't have to say, well, that's the very top of the move, Shane, and you're not representing down action. I said, yeah, we are. We really are. We're looking at the guts of this trend, and the guts of this trend are this high, and this high. So let's go ahead and try to draw a trend line with MT5. I know that it's not the easiest thing in the world. It really isn't. It should be a little bit easier than what they make it. So what do you have? See the way that's clunky? Very difficult, but right there, boom, boom, boom. So that's sort of where your trend line is. We were almost there yesterday. I do like that right there, somewhere right around 80.18. So the idea that we're going to sell somewhere between 80.15 and 80.25, I like that trend line, guys. It's a daily trend line. I'm not necessarily a trend line trader by any stretch of the imagination. A lot of folks are a lot better than trend lines than I am, but it's pretty obvious that we've got an obvious zone that's coming our way. Now, it's not a complete 45-degree angle. This pitch here is not as steep as a lot of folks like it to follow a trend. But what I see is a situation where, okay, we've got a real defined area here. Every time we pull back, we fail. So we're not going to argue with the macro trend. We're just going to give ourselves a ballpark entry and an opportunity maybe just to capitalize on some bearish pressure. I really like that one. That's got to be one to watch for next week. You can see we've already got the pullback today. You would have loved to have just peaked up here and hit this trend line and reversed. I think you got a pretty good chance there potentially to take a position here and make a few bucks. Now, the way that I would execute is I'd be looking at that trend line and saying, okay, that's going to be my short. Remember, if you do get a daily close above that trend line, you've either got one of two options. Number one, you can put your stop loss above that daily close, that daily high on the positive close, and then short. Or you can just exit the trade if in fact you take the sell there and then you get that daily close right above that trend line, then you can just exit right there. That would be a great example of a swing trade. With the Swissy, I don't see any reason to try to reinvent the wheel here. Follow the trend. The trend is your friend till the bend at the end. That's for sure. So a lot going on here. Let me see. Tina Jing, the figures haven't got much of a changes. Yeah, we're going to hit that in just a second. I already read that one. Sorry, Tina. Tina, U.S. dollar, Canadian dollar appears to be forming a head and shoulders pattern. Did you say you would go short? The head and shoulders pattern on which time frame, Tina? We can go ahead and look at the dollar CAD if you'd like. Not really sure. Just throw the time frame in there, and I'm more than happy to pull it up and see if we can find the head and shoulders. For me, the idea behind going short is sort of multifold. It's got a couple of different facets to it. Number one, big round number. All right, 140.17-ish. It's right around 140 and a quarter. Love it. Love that zone. As far as why would I believe in that level being potential resistance? Because it's a macro Fibonacci retracement sequence, meaning monthly spike high, monthly spike low retracement right in there. We've got a pretty good opportunity there to take the short. So that's where I would short from. I wouldn't short right now. Now, it's one of the reasons why, some people like my trading style. Other people really don't. And it doesn't bother me. Everybody has to trade their own way. I like horizontal support and resistance levels. I'm pretty good at spotting them and figuring out where the market is at least going to get a little bit of friction. That's all I want is a little bit of friction. That's it. If I get a little bit of a fight between buyers and sellers, we can step in, we can reach in and take the profits, and we can move on to the next trade. So that's one of those things that I really champion everybody thinking about, as opposed to hitting the 5X and the 10X and all those big-time trades. But we have a lot of crossover strategies too. We have an orb. I'm going to go ahead and set up an orb here, a 15-minute orb on the US 30 to really try to see exactly what that core PCE number did to equities. And I think we're going to have a pretty good look at something that's instructive. That's for sure and certain. All right, everybody. So the week today was the PCE Price Index. That's what we wanted to see. And, it really didn't disappoint. A lot of folks said it was a boring number. It wasn't a boring number, and there's a lot of reasons for it. You've got a situation where we don't necessarily know what the real state of inflation is, but today was a step in the right direction, and I think that the powers that be are very pleased with today's numbers. PCE Price Index for Friday. So here's the news of the day. Here are the figures. Core PCE prices came in at 0.2%. That was in line with expectations and the previous release, okay? Core PCE Price Index year over year. Okay, so that's 12 months adjusted seasonally. 2.9%, 2.9%, 2.9%. So that's big. Core PCE didn't move. And that is always an encouraging sign. But remember, prices are still growing. Now, a lot of folks are always going to yell at me. The economists, I've had arguments with economists before where they just flat told me, you don't know what you're talking about. inflation always grows. It's the way fiat currency is designed and yada, yada. And my argument to that is always, we haven't seen any type of inflation in the history of this country like we've seen since the COVID-19 era. Very, very important there. So I always say, listen, you're dealing with an unprecedented event that is still impacting our markets greatly, greatly. So you've got right here, we're still growing. Prices are still growing. I'm going to show you the 10-year chart here in a second, and you'll see exactly what I mean. But so your core, though, but you came in line with expectations. So at this point, it looks like the markets have just sort of expected inflation. They expect it to come our way no matter what. Right here, the PCE price index came in at 0.3%. That was in line with expectations for August, but it did tick higher from the previous release, okay? So we're still growing faster. Not good. PCE prices year over year came in at 2.7%, in line with expectations at 2.7, and then also slightly higher than previously noted at 2.6. Now, when the Fed makes their interest rate decisions, they do cite PCE, typically in those Fed announcements that we cover live. You will hear them cite the PCE price index. Typically, J. Powell and Company, they do it on a yearly basis. So this number right here, 2.7 over 2.6, that's going to be an important number to the Fed. And then also 2.9 to 2.9 to 2.9, that's going to be a big one as well. So the narrative here is inflation is slowing. Prices are still growing, of course, but inflation is slowing down a bit. Okay, that's a positive thing for Fed policy, right? That means that policy is in a good place. So what else do you have here? You've got personal income. Personal income's up 0.4%, over what was expected, 0.3%, but in line with last month. And also personal spending is up 0.6%. That's over 0.5% expected and up from 0.5% last month. And real personal consumption is up 0.4%. I always love these comparisons, and a lot of people interpret things differently. I was sort of raised in a blue-collar, old-school household. And there's always, the old saying is, if you don't got it, don't spend it. Well, personal income's up, so is personal spending. Is personal spending outpacing personal income? Yeah, it always does. So if you don't got it, don't spend it. If you don't got it, don't trade it. If you don't got it, don't gamble it. You guys know all the parables and all the old not fables, but cliches. I mean, call the cliche police, but so what's happening? People are making more and they're spending more. Why are they spending more? Well, prices. Prices keep growing. Things are getting more and more expensive, and I don't know that there's any stopping that. I really don't. As far as what we can expect moving forward, more rate cuts. We'll talk about that in just a second. Here's the official release. The PCE price index in the United States increased to 127.29 in August from 126.95. PCE price index in the United States averaged 60.64 from 1959 to 2025, reaching an all-time high of 127.29. All-time highs. We have been pushing all-time highs in these inflation measures for the past several years. And all has to do with the COVID-19 era and unlimited quantitative easing. Now, a lot of folks are going to look at this chart and they're going to say, Shane, who cares? I'm going to say, well, let's take a look at what's happening here with inflation. This is sort of a more normal type of an inflationary deal. We had sort of real flat inflation coming out of the financial crisis of 2012. And when the market started to pick up in 2015 and 2016, you started to see really growth in the equities markets. That's sort of what you would call an acceptable inflation, real inflation. What real inflation is okay, are the growth in consumer prices outpacing what people are making? As long as you're making more, your wages and everything is making more than prices are increasing, then the inflation's negligible. It really doesn't matter. It just takes, eventually when you go down this road long enough, it just takes $50, to buy a stick of gum or something. But the idea is, well, you're making that much more money, so everything's going to be okay. That's the idea. I don't believe it. I think it's a big experiment. It's been about a 100-year experiment now, 120. We'll see how it ends. Right here was your pullback. You'll notice that inflation, we actually went into a severe deflationary cycle right around COVID-19. Why? Because the world shut down. Pure and simple. Fuels, all right? Gasoline was extremely cheap because, basically nobody was driving. So what did we have right here? We had a dip in inflation, an actual pullback. You typically don't see those unless you're in a financial crisis or another crisis of some sort. And then look what happens. We kick way up. Now, what bothers me, and it's always bothered me, is the trajectory of this line. The trajectory of inflation between 2021 and say about 2022 and a half, somewhere in there. That is very steep inflation, and that's indicative of unlimited quantitative easing. Unlimited quantitative easing was flooding the market with money, so we avoided a depression. That was all the checks that went out, all the stimulus checks, all the emergency loans that were issued to businesses, all the billions and trillions of dollars they did with that. I mean, they don't really know how much money was put into circulation. The United States Federal Reserve put a 0% interest rate out. They were loaning to sister banks, being the lender of last resort. They kept the regional banking industry afloat. That's what the Fed did. In doing so, it also decreased the value of your money. Why? Because everything costs a lot more now. In 5 years, the inflation's been astounding. So this we would deem sort of acceptable. That's a low grade. You know, we're sort of going up a little bit. And then we get the pullback for COVID, and then we just get an explosion. The numbers go through the roof. Why? Because there's that much more liquidity in the system. Everything costs more. Nobody really cared. They had it. Now what's happening? What we're seeing is sort of a return to the normal trajectory. Similar, right? It's still a little steeper than it was in the 5 years before COVID. But right here, you're starting to flatten out just a little bit. What's the big problem here, though? I'm not trying to teach an economics class here, but what's the problem with this? You are a lot higher than you would have been if you would have just kept this steady slope. Look at the bottom of my arrow there. The bottom arrow right there. Just put this on as a 45-degree line. Where are you? You're probably like right around 119. Where are we? 126? Prices are entrenched, guys. This inflation's entrenched, and it's not going anywhere. If they were serious about restoring pricing stability, or at least reasonable prices, interest rates would go through the roof, at least for a year, 18 months. All the bad debt would get washed off the books. Prices would come down. Demand would come down for a lot of goods and services, and you would reestablish a legitimate baseline. Now, we're talking about pricing stability being higher prices, not coming down. Inflation's entrenched. And as long as it doesn't grow as fast as it used to grow, they're going to say it's under control. It's a complete lie. Don't fall for that. Next time somebody tells you that inflation is slowing down and that it's being managed, it's not true. It simply isn't true. So what did all this do? What did all this core PCE stuff do to our U.S. equities indices? Well, U.S. 30's up, having a big day, up 345 points. One of the bigger moves we've seen in quite a while. Here's a monthly chart. I want to go ahead and just draw this orb, this 15-minute orb, and then we'll go ahead and see. I'll go ahead and answer your questions. I see there's a few more up on the live chat. Doing my best here without my little stream deck. I can't push the buttons. I have to manually click between scenes, so I don't know what's going on with that. So what do we got? Right there, okay, 15-minute. We want a 15-minute orb. Opening bell, ding, ding. You can always tell the opening bell in your first candle because of the big, massive run in volume. Volume is always a huge thing when it comes to the U.S. equities indices. If you don't see a big spike of volume right around the opening bell, it means something's wrong. It means something's wrong. So if we're going to go with a 15-minute opening range breakout, what should it look like? Something like this. There's bar number one. Bar one, bar two. So 1 and 2. Where was the entry point? Probably right there. There would be your entry candle. There's your sell. You got a few pretty good moves, and then prices just rotated against you, and you're almost stopped out. Interesting. So why would this be a questionable orb to take? Because of the PCE figures. It's very difficult for us to anticipate a big-time trend day after such a key news event. What I would say about the U.S. 30 is a lot of these gains, I mean, right in here, you're sort of choppy, realistically, choppy. You got sort of a leg up right there, right just ahead of the British Open there. And then, boom, you got the big explosion where right on your PCE numbers. That's a majority of your gains for the day. So right now, even though we're up 350 points, you know, what are we up 100 points in the U.S. session since this high? So this is a really tough time to be trading orbs on a key event news day. Boy, I would stay away from orbs on probably Fridays in general, just because even if you get into a great trade, you have to understand there's profit taking and all sorts of risk management towards the end of the week. I think an orb strategy, I don't want to really preface anybody's orb trading, opening range breakout trading, because if you're making money on your Friday trades, your Friday orb trades, that's great. Keep doing it. For me, though, from an intuitive standpoint, I would think that Friday is going to be a tough day to trade breakouts, tough day to trade orbs, just because you've got that Friday close looming. And there's not a whole lot of folks, not a whole lot of retail folks that are going home long the U.S. indices over a weekend break. So I think there's a lot of risk management. A lot of things can happen here in the last 2.5 hours of the trading session. I would be very, very careful with anything that I was doing with the U.S. equities indices. I think you could really run into trouble if you try to force the issue as opposed to just being patient, ride the wave, maybe wait for Monday. But at this juncture, this orb trade does look to me to be a loser. Now, if you back off your time frame and go to a 30-minute chart, what do you have? You still have the same problem. A lot of times the 30-minute will save you. So this would be your first 30-minute bar opening bell, ding, ding. And then right there, that's second candle. So there would be your candle. There's candle 1. There's candle 2. Did you get a close? It's like I always say, if it's that close, don't take the trade. 30 minutes saved you there, whereas the 15-minute chopped you up. Something to think about there. All right, let's see. Do we have any more questions at all? I wasn't too far behind. Yeah, just to recap a little bit, Andy. Yeah, the heat map is going to be the heat map is for MT5. That video is probably going to be dropping next week sometime. I think it's still in edit. I've already made it though, so it's still in edit. But we're going to get that out to you as soon as we can on the Switch Markets channel. It's a pretty good one. Shows you how to line up your heat map and everything. As far as what else we can expect for the near future, I'm going to have the trade schedule up. I'm going to have the stream schedule up for next week, and I think it's going to be an interesting week to be on the markets. That's for sure. We're not going to want to miss it. Now, as far as what we're looking at here with our our Fed interest rate decisions, what we think is going to happen with the U.S. Federal Reserve. Well, I mean, we pretty much know the way forward now. 87% say we're going to go ahead and cut another quarter point here at the next meeting. And then right here in December, you're looking at maybe potentially getting another rate cut, maybe even more of a rate cut. So December, we're thinking we're coming down at least 2. We got a 30% chance of only 1. 66 says we're going to be down a half point by the end of it. By the end of this thing. So interesting stuff, guys. To me, I'm looking at that thinking, well, I mean, it's a dovish interest rate cycle. What do we think is going to happen next year? I think they keep cutting. I think they keep cutting and cutting and cutting. It depends on what the Fed looks like, who's in it, who's voting. But I think you keep cutting probably into perpetuity now. All right, Bitcoin. Let's see. What do we have with Bitcoin? Sort of an interesting type of a market dynamic. Your 30-minute chart, I'm not really certain how exactly you get these things cooking. What do we got here? An open position from earlier this week. All right, nice big pullback. That's fantastic. 109, somewhere right in there, 109-ish. Interesting. Let's go ahead and back this off. Let's take a look at our longer time frames. Yeah, this is relatively straightforward. Monthly chart. I'm on the monthlies a lot, guys. Spike low, spike high. That's the money level right there, 38%, right around 105, 369. So if you get an opportunity to bid that this weekend, I would say, yeah, you probably want to. I'm still bullish Bitcoin. I like the top side of Bitcoin. I think the fundamentals that figure into what we're going into with the crypto in general. You've got an administration that is pro crypto. They're pro crypto. You're seeing institutional adoption, not only within the government, but you're talking about all of a sudden the big banks getting into the crypto custody business, which means you're going to be able to hold savings accounts and Bitcoins and things. So that's going to open up the door to just a lot more consumption from the institutional end of it. In order to service some of these custodial accounts, they're going to have some sort of inventory of crypto to guarantee withdrawals and transfers. So that right there is going to help crypto prices. Probably a majority of those cryptos that the banks are going to hold going to be Bitcoin and Ethereum. That would be my guess. Probably some XRP in there as well. But the Bitcoin is an interesting case study because a lot of people believe it's going to 1 million. A lot of people believe it's going to 2 million. A lot of people believe it's going to come down to 75 or 50. We don't know. We know that 100,000 is a big level. We know that it's been in a bull market for a long time now. I mean, we've exploded since those lows of 17,000 a couple years back. I believe that was the first YouTube video I ever made was about Bitcoin. And, we did pretty well with the call on the bottom. It was right around 117. So, 17,000. So it's been a great run in the last couple of years. Is there always corrections? Yeah, there are. But take a look at, exactly how Bitcoin's been moving at the beginning of this, really down from this breakout back in 2022 from about 17. It's just absolutely exploded. And if you're an Elliott wave trader, what are you doing? There's your move. Run, pull back, run, pull back, run. I mean, it's almost a beautiful, beautiful Elliott wave. So big picture, if you're looking at an Elliott wave and you say, okay, what are the movers and the shakers? Okay, 1s, 3s, and 5s move. 2s and 4s are pullbacks. That's a 1. That's a 2. That's a pullback. There's a 3. There's a 4. That's a pullback. There's a 5. That's a move. Are we getting ready to reset the cycle and maybe pull back and get into another wave count? Maybe. Maybe. Maybe not. It's hard. It's really difficult to say. But what we do know is this. The overall sentiment in this market's bullish. You are seeing some compression. You had a correction last month of about 6.5%. This month, you're up about 1.5%. We've only got a few trading days left in September. Something like this isn't bad. Nice support zone, 105, maybe 107.50. That's really hard to pass on. Really hard to pass on. So I'm looking at that. I think we've got a chance to make some decent money on Bitcoin. I'm just going to sit back, though, and let it come to me. I mean, is this market going to make another leg higher, or have we reached the end of our count? I mean, a 5, 1s, 3s, and 5s move. The 5 is the 5 over. We don't know yet. If we see the big pullback, the 5's over. Then we reset. Then we probably get a pullback and then an area of compression. And then if we're going to go higher, we reset with a 1, a 2, a 3, a 4, and a 5. Now, that's a very basic way of trading Elliott wave and looking at Elliott wave. I like to keep things extremely easy. They can get extremely complex where you get into counting wave counts. They break it out. The granularity goes all the way down to sub-minuets, and it gets very, very difficult to do. I've gone down that road. I had an opportunity to actually watch one of the Elliott wave he was an Elliott Wave master, but one of the original Elliott Wave guys, Ron Silverstein, he worked for Elliott Wave International and was an incredible Elliott Wave market analyst. He's still out there. I had a chance when I was just in high school. I was a young kid in middle school. I was watching him and my uncle trade, and I watched him with the graph paper drawing the Elliott Waves, and I said, man, that looks really hard. And they said, it's not really that hard. Just remember 1s, 3s, and 5s move, 2s and 4s are pullbacks. And I said, okay. If you say that, I'm gonna take that to heart. And that was 30-something years ago. There you have it. So those are my thoughts on Bitcoin, Matomi. I hope that helps. Cool beans, easy money. I like easy money, guys. I like easy money. There's a few football bets out there tomorrow that I think are easy money. We'll see if they are. That's for sure. All right, guys, if there's not anything else, I'm going to go ahead and sign off here for the weekend. I'll have the new streaming schedule will be up here relatively soon here on the How to Trade website. We'll be going live every day. I believe we're going to do a couple of workshops next week. Probably that was we saw the most interest on the 920 EMA workshop. Nice strategy if you're interested in that type of trading. With regards to what we can see potentially over the weekend news cycle, we saw some high-level indictments today come down against ex-Justice Department officials in the United States government. This is a storm that's just getting started. So lots of tense times here in the United States, lots of violence, no two ways about it. And we're going to go ahead and ride this out. All I will say is be ready for anything on a weekend news cycle. Literally anything can happen, guys. Anything can happen. So if you're thinking of going home long or short, it's probably not the best time to be doing those types of things. There's nothing wrong with waiting for Monday. There's nothing wrong with waiting for Monday, watching the open, watching a few hours of trading and making our decisions then. You'll notice we didn't really cover gold today because gold's right around 37.80. The uptrend is still continuing. I want to dive into that. Next week. Actually, we got to pull one chart before I go because I did forget. Let's go ahead and see if we can get this. Silver. Silver's up almost 3% today. The market's exploding. We talked a lot about the 40 level. We talked a lot about $40. We had a little bit of compression here, and we said, hey, listen, once we break 40 with silver, this thing's gone. Absolutely gone. And what's the next port of call? We're spot on with this. It's 50. So if you don't already have it marked on your silver charts, and if you guys are trading the silver CFD with maybe low leverage, mark 50. It's absolutely the biggest number on the board. So it's like 25,000 for the NASDAQ. There's no question that it's the biggest. So right there, that goes back to April of 2011. That was the heart. That was the heart of the financial crisis of 2008 to 12. That was a major recession, and banks were failing. That was a really tough time to be in business, in any business. This right here tells us that we are now approaching crisis levels. What does that mean? Is it an economic crisis? Is it a geopolitical crisis? Is it a domestic crisis? I don't know, and I'm not going to pretend to know. But to think that silver on this much of a rally doesn't mean something, it's crazy. We're going to 50. This is a major breakout. Take a look at this daily chart. It's an absolute explosion. For those of you that don't really believe in chart patterns, look at this. Boom. Boom. Bullish pennant, bullish flag. Big 3-day run. Boom, boom. Compression, compression, break. Really a challenge to, you want to buy any pullback you can get. You're just not going to get one. So the next port of call is going to be 50. It's going to be 50. After 50, where would you say this market could go? There's no rules on how high silver can go. Right now, we're really bringing in that gold-silver spread. It was right around 100, the gold-silver ratio. Wrote a lot about it earlier this spring. Gold-silver ratio was running about 100. It's well under 100 now. The actual math would be what? I don't know. Let's do it real quick. Told there would be no math. 3782 divided by 46. It's at 82 now. Gold-silver ratio. Keep a close eye on that. We talked a lot about it. Just because the gold to silver ratio typically is gonna fluctuate and come in a little bit, it doesn't necessarily mean that gold's going to come down. It means silver is going to go up faster than gold. I've listened to a lot of folks that trade silver, and it looks to me like they're correct in their predictions. I mean, there was folks back in the beginning of the year piling into silver at 30. They've made a haul thus far. So that right there is sort of your next swing high. That's the crisis of 2011. What's this crisis right here? January 1980. 49.81. We're going to be in rarefied air. Where does silver go above 50? Does it go to 100? Could easily go to 100. Could it go to 200? Could easily go to 200. There's going to be no rules up there. Once we get above 50, we're going to probably step up and sell right in front of 50 and make a little money on the retracement. But once this market breaks over 50, all bets are off. Look out. Silver's got to be the biggest mover and shaker of the last several months. So watching it closely. We're probably going to have trade ideas out for silver next week. I just want to see a little bit more out of it. But absolutely unbelievable break. Unbelievable break. Let me see, Callie. Enjoy the weekend, Shane. You have a great weekend too, Callie. Blue Mango, absolutely enjoy your weekend. Everybody enjoy your weekend. Cool Beans, yours as well. Tina, silver has much better move than gold. Gold is not very exciting today. No, silver's on fire. They're bringing in that ratio. Watch the ratio. Watch the gold-silver ratio. The institutions are. Keep a close eye on it. I expect it to come in. 50%? Maybe. 75%? That's the next stop. Bobby Bob, hey, thank you, Shane. Next week, have a psychology session. Yeah, I probably should do some psychology stuff. We haven't done any of that in a while. We'll do like a Friday psychology or maybe a Monday psychology. We'll see. All right, everybody, I'm going to go ahead and sign off for this week. Thank you for joining me all week long. If you have any questions at all, head on over to howtotrade.com. Send me a private message. All you got to do is just click on my picture, send me a message if you want to say hi, or if you have any questions you want to talk about in private, I'm more than happy to answer. Until next time, until Monday, trade the action well, and we'll talk soon. See ya.